Welcome to folks. Tommy O'Brien coming to you live from TFNN, 3:07 p.m. Eastern Time on Friday, and we got some action to the downside with markets pulling back in some holiday trading. Whether you got some rebalancing going into the end of the year potentially, been quite a year for the Magnificent Seven, and they are almost leading this pullback. Right, you get the Russell down 38 points. That's 1.7%. So it's not just the Magnificent Seven. Okay, but you do have the NASDAQ 100 off about 1.6% right now. You got the S&Ps off by 1.2%. The Dow in the red by about 0.8%. And let's just jump around to some of the Magnificent Seven. Apple shares. Now, the whole market's caught a little bit of a bid as we kicked off the 3 o'clock show. We talked about, right, S&Ps up about 48 points off of the lows when I was doing that update. So Apple catching a little bit of a bid, but you're still down by 1.5%. Microsoft off by 1.9%, and you've almost caught a bid of $4, right? You got Amazon off by 1.6%. Google shares off by 1.5% right now. Meta off more than a percentage point as well. Tesla off by 4.8%. I give them special attention just because they've been such a part of the run, right? The part of the run recently from a valuation of $215 to 100% higher, still at this price level of $432. Remarkable, the acceleration it's had. We jump over to yields right now. One of the stories, for sure. With the yields, we're talking about a 10-year right now. Where are we sitting? 4.62 and inching towards 4.63. As I mentioned, that small tail yesterday, let's put it on a 15-minute. That was correlating to yields yesterday morning, approaching about 4.64. So we're right at the highs we've seen recently. And you put this thing on a weekly, right? Look at this critical area you're at right now. 108.13, lows earlier in the year of about a point lower of 107.04, so almost a point and a half. And then you got this 105 and change, which will correlate to close to a 5% yield on the 10-year. You jump over to the dollar, critical area in the same way when you look at things. Bumping up against the 108 level, holding above that level right now, barely at 108.03. You jump over to the VIX. All things considered, not that bad of a VIX with what you got going on. Look where we are. VIX just back to where you were on Tuesday. Okay, VIX just back to where you were at the opening bell. Not a lot of volatility premium in this market, even when you get a sell-off of 100 points in the S&P, just like that. That's almost a little worrisome in its own, right? People aren't paying for protection, even when the market's accelerating lower. As Bloomberg puts it, stocks rocked by late week swoon in tech giants, okay? Now, some of the charts they have in here. Let's just jump to some of the interesting parts of it. That's just talking about the weekly performance, but how about this one? This is the Magnificent Seven. Bloomberg, Magnificent Seven Total Return Index. So, yeah, you're seeing some pullbacks today, but this index, made up of those seven, 70%. 70%. We didn't pull up NVIDIA. Shame on us. How can we not pull up NVIDIA on a day like that, right? NVDA down by 2.1%. All right, so you have NVIDIA down more than 2%, Tesla down almost 5%, all the other big equities in the Magnificent Seven down between 1% and 2% right now as the market rolls over. And as they go, the market goes. That's the other story I wanted to get to here. Okay, S&P, best year since 2021. Look at this year. Yeah, you had a couple pullbacks, but man, not really. Not the trend is your friend, right? Higher highs, higher lows across the board. And yeah, last part I wanted to get to, it's been about 50% of the gains. I was looking for the quote. As those Magnificent Seven, you're talking about almost 50%. Nonetheless, they get hit a bit today, and we'll see where they go from there. We talk about treasuries. Yields on the rise. Treasuries trade mixed with a 30-year yield near 2024 highs as we come into the end of the year. Term premium getting rewarded. Higher for longer is in play here. Okay, you're looking at a term premium on the U.S. 10-year Treasury. Yeah, you're approaching the lofty levels we saw in 2023, and you're talking about higher for longer. We've been talking about the rates. We've been talking about that the market right now is pricing in 2 rate cuts next year. 1, 2, 3, somewhere in there, but 2, the most predominant one on a probability basis of what swaps are pricing in, going all the way out through December of 2025. The market looking for about 2 cuts. So if this is the market adjusting to higher for longer, it's going to take a little time. My dad would say it'd be a slow bleed, right? The market's just not going to shock everybody to 5.5% instantly, because that would be difficult. If we're going there and there's just plays, we'll see how some of the inflationary factors play out in the next administration. But the next Fed meeting is January 29th, I believe, and the next administration is January 20th. So as traders, we got an exceptional time of volatility as the market. You know, the market does not enjoy variables or unknowns. And there's a lot of unknowns out there right now of how that could play out when you don't know how some of those policies are going to play out, whether it's tariffs, most importantly, or immigration, depending on how they all play out, because they all could be inflationary. And then where does the Fed go as a result of that, right? You jump over to gold. I talked about gold. So take a look at this. You jump over to the dollar, okay? The dollar from August 20th to October 1st, that's 6 weeks, okay? That is 6 weeks on this chart. Middle of August to the end of October, you were pushing 100. You got within almost 1/10 of 100 on the end of September, okay? You back it up to gold. You can see that gold was trading at 26.64 with the dollar at about 100. Now, yeah, you've had some volatility over that period of time, but we're trading within $15 of that price level. Meanwhile, the dollar from October 1st went from almost 100 to 108. And meanwhile, if you're pricing gold in a $108 today, it's worth almost the same thing as what you were pricing a $100 on October 1st. That is gold strength. Okay, and eventually that will translate into dollars if you get a pullback, but that's not going to happen anytime soon if these higher yields are coming at us, with the dollar sitting at about 108 right now. Almost exactly, right? 108.04, that huge acceleration when the Fed said higher for longer. 2 cuts next year, not 4 cuts next year, coming at you, and we'll see where they go from there. All right. All right, folks, stay tuned. We'll come back. We'll talk some other equities. Yeah, we got a couple news stories up there pulled out. We'll see what's going on in the market and holiday trading. Friday, coming into late December, last weekend of the year. Stay tuned. I'm coming back, folks.